The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity. Prepare for your retirement. Safeguard your savings. And nurture your investments. This is the Max Out Savings Show with Ted Gioca, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioca.
Welcome to the Max Out Savings Show. I'm Ted Gioca, and we're talking savings, investments, in your retirement here on our show. Our show is all about building up wealth, understanding the world today, and planning for retirement, dealing with retirement, and putting it all together in a package to protect your wealth. Our show is we've been running 20 years now on the show, and this is actually the first one we're doing. We're also going to do video going forward, so we're working on that. Today we're doing video, and so the show keeps expanding. It's one of Houston's most popular financial shows, and I appreciate all the support we get from our listeners. Our show and our motto and our philosophy is to save aggressively and invest conservatively. Save aggressively, invest conservatively. That's the key to building up wealth over the long term. Starts with your 401k plan, your 403b, your different types of plans. You want to put away 10% plus the company match minimum. We're figuring it's 3 or 4%, so that gets you up 13, 14%. That's where the number is where you need to save for retirement. If you're over the age of 50, you're behind in your retirement, and a lot of people are. Now's the time to take charge of your retirement, increase your savings, make it 15% if you can. If keep in mind, if you're 50 years old, the government lets you put away extra money in your 401k plan, and your IRAs as well. You've got 15 years to build up that wealth, and it makes a huge difference. So if you get a chance, take charge of your retirement, increase your savings today, and build it up from there. Look, at Max Out Savings Advisors, our main business is we manage people's retirement money after they retire. If they have an old 401k or a trust or something, they bring it to us to manage. We don't manage 401ks, but we always start the show talking about this because it is so important that to be in that world to build up your wealth. I mean, this is where it all comes from, is that savings program. And so once you get that going, then it's just on autopilot, and then you conservatively manage the money. Hence, save aggressively and invest conservatively. Now, we got a lot to talk about on the show today. Again, it's just extraordinary. Things are moving all the time now at a very rapid rate. We have the AI build out. Well, that really is one of the, it probably rivals the railroads and electricity and the telephones in the past. And so this is a huge thing. We have the war with Iran. The wars, this thing was supposed to be a 2-week deal. It's not gone well. We've been in this game since April, 2.5 months now, and that's not going well. We have private equity, private debt, a crisis there where people can't get their money out there. We have really the build out, the reshoring of manufacturing back to the United States of America. Look, we sat around for 30 years and watched China steal a good portion of our industrial base because basically we were stupid and greedy. Corporations got greedy, and the government, quite frankly, completely mishandled it. Thought that it was going to be everyone's, the whole pie was going to grow bigger philosophy, and everyone in the world took advantage of us until President Trump came in and said, "I've seen enough of this," and he's forcing these plants back to the United States. It's defense plants. It's rare earth metals. It's all types of things like that's going on out there right now. And so we're seeing a lot of that out there. And so what we're dealing with, it's drug plants, it's auto plants, it's all types of different things out there that are coming back. I mean, this is a big deal. It's a huge deal. President Trump, I've said this, he put in the he put in a remarkable plan to rebuild the United States of America, to get our debt in order, to bring our factories back, to increase manufacturing, to increase wages, to increase unemployment, to reduce our deficit, reduce interest rates. Only mistake, well, you can say it was a mistake or not, but it was probably not the best timing, was this Iran war. Besides that, and it's overshadowing what a remarkable job he's done. And so the question is, what do we do from here going forward? And I think we want to go over that today. I mean, it's just remarkable the world we live in. And so a couple of things we're going to cover today. What's going on with with AI? There seems to be a lot of hype around that, to say the least. What's going on with the Iran war? What can we expect there? What's really happening? And how are this going to affect? Where are interest rates going? Where's the markets going? How do you protect yourself in that type of? How do you protect it? And I think at Max Out Savings Advisors, I don't know anyone that has basically been able to kind of navigate through enormous numbers of crisis over the last 25 plus years, and really do protect our clients' assets. That's what we do. We're basically investors in the stock and bond markets. We're value investors. We typically purchase stocks, bonds, some mutual funds, ETFs, those type of things. We don't use annuities. We don't use different types of things. We tend to use very high quality products that can ride through different types of crisis, because we know if we can just stay out of the problems, we're ahead of most people out there. And that's kind of our philosophy. So let's take a look at the markets. S&P 500 hit a new high. AI is just exploding out there. They're talking $800 billion worth of spending, past $750 to $800 billion this year. $1.1 trillion in AI build out. It's building out AI centers. We're building out the electricity. We're building out the grid. It's just an enormous undertaking that we've rarely seen. At the same time, we're bringing back factories back to the U.S. So it's exciting times. Now, I've been in this market a while and studied it since I was very young. I don't think I've ever seen the frenzy that we have in the AI this week. It was truly extraordinary. People running around, basically saying you should be mortgaging your house and dumping it into the AI stocks. And there's something that people need to understand with this. Is AI a big deal? Absolutely. Is it a game changer? Absolutely. But does that mean it's not a thing where everybody is going to be a winner? All the AI companies are not going to be winners. Right now, the market's valuing, all the company has to say is the word AI or data center. They're building a data center or a new chip, and they will mark the stock up 5, 10, 20, 25, 30% in one day. And that's pretty much almost a mania. And a couple things that we need to understand is AI is two things. Number one, you have the AI build out, you have the integration of AI into the United States economy, and number two, you have AI stocks in the financial part of the AI, which is the stocks. They're not going to move at the same time. AI could go straight up for 5 or 10 years straight, and the market could peak tomorrow after, Monday morning, and that'll be it. That'll be the top. And so the question is, so when these people are all talking about this build out as far as the eye can see, that might be correct, but that doesn't mean the stocks are going to go up as far as the eye can see. If you looked at the electrical stocks, I believe it was the 19 teens and 20s, they peaked when only about 20% of the world, of the people in the United States actually had electricity. And so it's the same thing with the auto. I mean, there was enormous. There was, at least, I haven't seen, I would guess between 25 and 50 automakers during the automobile boom. In the end, you had Ford, GM, and Chrysler. And so right now it's participation trophy time in the stock market. And so you want to be in the sector. We're in the sector for our clients, but at the same time, you can't let yourself get carried away. I was listening to one big financial TV personality who was just, it was just, pounding the table. You had to get in. This is a once in a life opportunity. And I'm like, well, yes, but it's been going up now for 2 or 3 years straight. And it's not like this is something new that nobody knows about. And when you get a hot market like this, you have to start looking at some risk management. You have to start, analyzing, hey, do I want to be in? Where am I in the situation? How do I want to move here? And not just, going wild and claiming you have to be all in right now. And so I think this is one of the things that we're going to have to see here is how's it play. Let me give you some numbers here that came out. It was that there's a couple things. The market is incredibly concentrated right now in AI. And if you look at it, if you take the Mag 7 and then add in Broadcom, Micron, Advanced Micro Devices, those stocks, that gets you up to about 40% of the whole S&P 500. So so when you're investing in the S&P 500, which is representative of the United States of America economy, 40% of it is in very, very hot AI stocks, which means that it's like an example. If you invested in 10 stocks and 4 of them were in all types of different sectors, 4 of them were in one sector, it's an overweighting. And by the way, that's just those basically 10 stocks, the Mag 7 plus a couple more. There's an enormous number of add-on stocks on top of that. Intel, I mean, that's another 10%. So half of the market right now is in these stocks. And this week, there's a lot of what's known as there's option buying calls and puts puts if the market goes down, calls if the market goes up. There's the majority, it's over 60%, 65% are calls, which is very unusually high, which means people are wanting to be long the market. Back in 2000 and around 2020 in that range, about 6 years ago, that a big day for the options market, they would do $200 billion nominal of options. So if you maybe buy an option for $2, but you control stock 100 shares worth $100, so it's $100 worth of stock for $2. Right now, that's what the nominal means. Right now, this week it hit $2.6 trillion worth of nominal on options in the market. I mean, this is massive speculation. I saw a company called Jane Street is out earning more. I forget the exact number. I'll get that. They're out earning Goldman Sachs in the biggest hedge funds out there right now. And Jane Street has been caught several times manipulating markets around the world and leading to criminal investigations. And they're very, very aggressive. They take on huge amounts of debt. We talked about J.P. Morgan's balance sheet. J.P. Morgan, one of their main businesses, lending out to hedge funds during the day. If something were to happen in the Middle East, and I won't even use it's specific. If specific, let's take a quick break here. But what I want you to understand is there is an enormous amount of speculation in the market right now, and does that mean you sell everything and head for a bomb shelter? No, because things could go a lot higher. But you in these type of markets is not when you want to just lose control of your investment philosophies and thinking. Now's the time when you want to be more cautious. Now's the time you want to continue to make money, but now's the time when you want to also don't be sucked into the people on CNBC, pounding the table that says that, stocks are going to go up forever. And you're looking at 3 to 4, 1 to 3 or 4 years of straight up markets. That might happen, but you're going to see corrections along the way. And we have rarely, if ever, seeing this type of decline. Tell you what, let's take a quick break. We're going to discuss some more of this, more interesting things happening with the market. Look, there's a lot of money being made in the market right now. Things are real good. Don't get me wrong. We're happy, but everyone out there is telling you it's going straight up. I like to take the other side and give some pros and cons to give you so you can make good investment decisions. We'll be right back right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioca is taking your calls now at 713-339-1070. Ted Gioca will return after these messages.
I'm Ted Gioca, and I approve this message.
Max Out Savings is looking at rising interest rates, the bond market, and our country's spending to project the impact on your retirement. They use that data to help you flex to current conditions with your future in mind. Call 713-627-0400 to learn more. That's 713-627-0400 or maxoutsavings.com. Remember, you can hear the Max Out Savings program right here Saturdays at 10 a.m. on AM 1070 and FM 1033. The Answer.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioca of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Once again, here's your host for the Max Out Savings Show, Ted Gioca.
Welcome back to the Max Out Savings Show. We're talking savings, investments, and your retirement. And we're just going over the markets here. Some of the things, again, it's a very hot market. We have stocks going up 10% a day, 20% a day. If someone has a new chip, they said, hey, we have an AI chip that's coming out. The stock might go up 20% in a day. Now, will that chip work real well? We're not sure. Will it be accepted by the buyer? We're not sure. Will it be successful? We don't know, but it's a new chip, and so we all want to be in there. And so in these type of markets, again, you want to keep your eye on the ball and watch things a lot more closely. Now's not the time to get things out of control. I saw another statistic last week that we had 2 days the market hit a new high, and with 4% of the stocks hitting new lows, and that. The only time that has happened has basically been in like 1929, 1999, in I think 2020. It rarely happens at all. And so again, it's another warning sign. You don't usually see that type of things happen. So basically, as we pointed out, the last time we saw market hitting new highs and then having 4% of the market decline, that was 1929. I mean, a lot of these things, does that mean, again, the market's going to crash? No, I want to emphasize, look, for our clients, we're invested in the stock market and stuff. But my point is, we spent a lot of time really trying to look at the alternatives, what could go wrong. And that's one of the things, So we want to, again, caution. You want to watch closely. I think when this thing starts going down, you're not going to have a lot of time to get out. And I don't know where that's going to be. So we'll just kind of watch it. There are many cheap stocks out there. We bought a stock about a week ago in the medical area. It gone down from like 130, 140 down to about 40 something. And we picked it up. And since then, there's been good news and it's going up. I mean, people, there's so much. What I think is happening is there's so much money pouring into the text, into the AI stocks that institutions are dumping other things because they want to get more beta to try to get make as much money as possible, and that's creating opportunities. I mean, again, as we said, that statistic, new high with 4% of the stocks hitting record lows. So we'll see on that, but that's something we want to continue to watch. Now, Chuck's question was, and again, this is live. This is our first video program, and so we're going to be having that. It'll be we'll be streaming video. I don't think we're streaming this one today. This is sort of the test, but Chuck's, should we reinvest in silver since AI and computers? Look, I like silver. I think you can buy some here. It appeared to be breaking out. It's about $80, and if you look at the chart on silver, it looks like I'd like to see it break out over 95 again. But I do think you can start making some investments. I'd only put half in now and see what it does. I really want to see gold go up. We've got good sized positions in gold. We've reduced them a lot just to try to balance the portfolios and take some profits. But I want to see how it's gonna play out here going forward. I'm a little more bullish on silver right now, and so that's something we're watching closely. Here's a statistic. For the month of March, what was the number one export out of the United States? Think about that. Tick, tick, tick. It was gold, non-monetary gold. To give you an example, it was 1.5 times the amount of oil, 2 times the amount of drugs, and 3 times the amount of aircraft, 2.5 times the amount of aircraft engines going out there. So there's enormous amounts of demand. There's enormous amount of demand for gold and silver from the Asian countries in particular, from around the world as well. I believe the Arabs are selling because they need to get they need working capital to run their countries, and they don't have the oil income. But the Asians continue to buy gold and silver, and if we look at it, by the way, out of the last 6 months, 5 of those months, gold has been the big component. So huge amounts of gold are pouring out of the United States, going to Asia. Remember, the Chinese and the Asians in general are huge savers. There's about a $51 trillion in savings in the banks and different things here. People talk about the money markets in the U.S. at $7 trillion, how that's going to support the markets forever. The number is 51. Now, I think apples to apples, the U.S. is higher, but understand that that there's huge demand for gold and silver from Asia. They are massive savers, and they're continuing to buy it. So we need to see the negative I've heard on the gold is it's possible that when Chairman Warsh gets in at the Federal Reserve, they're going to try to stabilize the dollar, stabilize the bond market, encourage banks to start lending more in Treasury bills. The banks right now, they're committing huge amounts of capital to the hedge funds. So the hedge funds come in, they've got $1 billion at the end of the day in treasuries or whatever, or different things. They go over and they lend it to people like J.P. Morgan. They get $2 or $3 billion, $4 billion more, and then they invest in the market during the day, and then they sell everything, or they kind of manage it down and then pay it down at the end of the day. That's why I really worry about, if something were to happen, like an event in the Middle East that's a true black swan. The real danger is that it triggers kind of a cascade of hedge funds that are trapped and unable to sit there and hedge their positions. And at that point in time, the government's going to have to go in to support the Treasury market, because if that crumbles, then they're really in trouble. At least during the trading, they can stabilize it overnight. But if something happens during the day, that's when you got to be careful. But that's just another story. By the way, if you got any questions or comments, you can give us a call at 713-339-1070 here at the Max Out Savings Show, 713-339-1070. A couple of things we're going to be covering as well. We're going to be there's some real interesting things happen with the RAND. I want to cover that as well. But I also want to touch base about, again, when we talk about risk management, when we talk about understanding the world, what you have to understand is when you're saving money, putting money in your 401k plan, you're working away, you've got money coming in, everything's great. If the market goes up and down, it doesn't, you just keep putting the money in and the market goes up and you'll be fine. If you're retired, you've got it's over 50% chance either you or your wife lives to be over 90 years old. So if you retire at 65, that means you got 25 years to manage that money. So this money has to last through 25 years. And the research has shown, people are always worried about running out of the money in. You almost have to be a little more careful initially with your money because you don't want to have a big drawdown initially because that's very devastating to your retirement long term. So if let's say you get a great financial crisis, which we're not saying that's going to happen, but just you sort of want to plan for everything. But let's say your portfolio goes down 1/3, so you've got $1 million, it's down $667,000. And if you're pulling a certain amount at $1 million, let's say you're pulling $45,000 out a year. If you start pulling $45,000 a year with 667,000, that's a much bigger percentage you're thinking, and you're going to draw down your portfolio very quickly. And so this is not well understood. Most people think most of the risk is later on at retirement. It really isn't. We had people that were buying things and they're like 75 and stuff, buying homes and different things and paying them off over time. You can kind of manage through that, and you can always sell a piece of property or something. But the real danger is if you get stuck when you're 85 years old and you have to sell off some assets, those assets are going to carry you for a long way in the future. But if you get hit really badly initially, then a smaller chunk of assets has to carry you a much longer time frame, 25. And this is one of the reasons we also try to encourage people to work longer because you bulletproof your retirement better. Also, that's just me. I think people, they do better if they're working. If you don't like your job, find another job, do something you like. Even if you're successfully retired, got plenty of money, I would still, if you want to do a part-time job, fine. I remember we had one client years ago, they were worth millions, and they had a job just driving cars around part-time. And just because they wanted something to do, and it was an enormous amount of money they had, but they like to keep active, and so be it playing golf, be it volunteering. I think the volunteering is actually much better than golf. Going out, doing things, getting a part-time job, having hobbies. You have to keep your mind sharp. I was talking to someone in there, last weekend. They're talking about they're playing poker, and one of them was, I think, somehow it worked back to one of the grandfathers playing poker. Well, it keeps your mind sharp. And so that's one of the real keys is you want to keep your mind and your body sharp. You want to exercise, you want to keep your mind sharp. So when people come into us and they want to go, should I retire? We look and see, do they have enough funds to retire? We'll sit down with them. We'll show them, what type of different programs how much you can expect to take out of retirement. We'll look at all their assets, and we'll sort of come up with the plan. It's a very simple plan, but because I think it's very hard to predict 25 years in the future. So you've got to keep things very simple so you can adjust it. But so so the question often is, if you want to keep working, keep working. That's what we tell people. You want to stay active and you want to stay healthy. Those are one of the key things. Now, a couple things happen when you do that. If you're retired, your mind stays sharp. You're doing things, you're engaging with people. I think it was with the hearing aid. If people, I saw some advertisement with the hearing aid. If you have a hearing aid, your chances of like Alzheimer's or something or dementia go way down. Well, that's real simple because you're staying engaged with people. Whereas if you can't hear, you tend to pull back a little bit. It's not that you can't hear, it's that you're pulling back from people and engaging people. So it's so important when you're retired to stay active. And if you're just stuck at home, find some volunteer work at the church, hospitals, there's all types of people that need help. Join some groups, some hobby groups. Keep your mind sharp. Walking, that's one of the best exercises. If you can walk a mile or 2 or 3 each day, or ideally 4 days a week, again, you want to stay healthy because you're going to live longer. Your healthcare costs are going to be lower, which healthcare costs is a big chunk of retirement expenses. So walking is free. Walking is easy. You don't need to have a gym. You don't need to do anything. You can just walk. And so take advantage of these simple things. I mean, it's never complex. I remember we had one client that, they were talking about, they were getting older and they like, what do we do? We're in our late 80s now. Should we get a 1-story house? And the husband's like, look, I don't get a lot of exercise, but I go up and down the stairs all day long and it helps out. And so, and he was basically right. By having to go up and down the stairs, it was a form of exercise. So it's every little thing that adds up to a successful and happy retirement. So if you can take advantage of those things, do it. But and we're going to do more on health because health is one of the people when talk about retirement, all they want to do is talk about their retirement, how their portfolio is going. But it's not just that. It's your lifestyle. Are you staying active? Are you staying healthy? All of those things. If you start getting medical bills, they just get to be enormous, and that cuts into your retirement. So take advantage of some of these little things to put yourself on top. And we've got. If someone wants to give us a call, I think we've got that working. Again, this is our first time to do video. So it's just, you can give us a call at 713-339-1070 and we'll get you on the air. That's 713-339-1070 right here on AM 1070, The Answer. What else do we got here? I'm going to cover that in there. The final segment we're going to try to hit with Iran. Again, that's a big deal. We just have all these big, with this AI build out that's so exciting. The remanufacturing, reshoring of manufacturing is so exciting coming back to the United States. We have issues with private credit that's tightening the market. Our government's borrowing $2 trillion. We're going to war right now, which is going to cost $150 billion at least. They're talking what 750 to 800 sometimes billion more just for the AIs this year. I think there's a possibility that we get some type of I think the money there in the past, you had kind of what was called crowding out, which means money became tighter because everybody wanted money. Recently, with the Fed flooding the system with money every single time the market, goes down 7.5%, it's kind of changed that. But I think they're going back to that because again, Treasury Secretary Bissett and Federal Reserve Chairman Warsh, these guys. They know they're looking at a $38 trillion deficit of debt they have to fund. And so the more you can show people that, hey, look, we're conservative. We're not going to go throwing money every time the market drops, 7%. We're not going to flood the system with money. We're going to do things differently. Well, what that does is that's going to sit there and create confidence in the dollar. People go, hey, in treasuries, these guys aren't going to sit there and spend every dime they have. So that's positive. But it means tighter money. And I think later this year, you're going to hear more about tighter money. People it's already happening with private credit and stuff. And there's just such demand for AI build out and stuff. The cost of money, I think, is going to go up. Never mind, we got $100 oil and the price of everything from chemicals to aluminum to fertilizer are going up at the same time. So this is something we want to kind of continue to watch out there. Tell you what, let's take a quick break. We're going to talk about, hey, where do we think things go from here? Right after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioca will return shortly. To speak with Ted Gioca now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant. And since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioca of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
We return now to the Max Out Savings Show. Here's Ted Gioca.
Welcome back to the Max Out Savings Show. We're talking savings, investments, and your retirement, going over some ideas. We just talked earlier about the markets. Very high, very frothy, very concentrated in tech. They're it really, some of the people on CNBC really seem to go off the deep end, basically, saying you should, hawk your children or something to get more money to sit there and invest in AI. That's kind of a warning sign. You want to watch that closely. By the way, if you got any questions or comments, you can give us a call, 713-339-1070 here in the show. This is our first video show. You can just call in on the phone. And I believe this might be streaming later in the week. So this is sort of the test run today. But so we're talking about the markets. Where we go from here? And again, I think you have to be in the AI. I think you have to play it. I think you would. It's not just data centers. It's not just chips. Keep in mind, it's also commodities. Something we've been talking endlessly on the show about. We had a caller ask about silver. It's silver. It's copper. It's aluminum. Keep in mind, aluminum, 10% of the world's aluminum capacity is offline in the Persian Gulf. It's equipment. It's things like Caterpillar. It's electricity. It's a build out of the grid. It's not just build out the electricity. You got to get the grid there. We spent no money for 30 years building our grid. If you look back on it, we went through a time when China started taking all our products. What we did is we said, look, we don't need that. We don't need manufacturing in the United States. We're gonna be a servicing company and be servicing, and then financialization. We'll financialize everything, so we don't really need manufacturing. We're going back the other way. This is exciting. It's a long-term trend. The question is it ahead of itself now? So Sam called in. Is it realistic to buy gold and silver now? And also, can we let me know if we can take them live? Look, I would hold off a little bit and see what the gold and the silver does. These guys, okay, Sam, are you on the air now?
Yes. Hi. Can you hear me?
Oh, yes. Oh, great. Yes, you had a question for us.
Yeah. A previous show, they were emphasizing the need to buy gold and the need to buy silver and how all of your investments should be in gold and silver. Is that realistic in the market currently, the way things are?
No, because look, we've liked gold and silver for years. We've made an enormous amount of money on it for our clients. I think you want to own it, particularly you want to own some physical for silver. And I don't care if you buy gold, there's physical silver and not a huge chunk, but a smaller part of your portfolio, and it goes down 20 or 30%. You want to hold that long term. That's one of the key things. However, the stocks right now have been selling off some. I think we want to see whether they're going to stable. If they continue to move up, it should create an opportunity in the stocks right now. I like the metals a little better than the stocks, but the stocks are making an enormous amount of money. The earnings are coming in very good on them right now, all across the board. The earnings were enormous cash flow in the sector. I think silver long term there's about a 700 million ounce shortage of silver over the last 5 years, and it's only going up because of solar power in AI. So I still like silver a lot. I like copper, gold. Here's the deal, Sam. Is one of the things I've got a number of different. I think gold's going up longer, higher term. I have I listen to a number of different people. We have some very sophisticated research we get, and one of them is laid out a pretty good case that gold could go to 3,700 if Secretary Bissett and Fed Chairman Warsh can stabilize the Treasury markets and get in there and start making big changes. They're going to want to minimize. They're going to want to increase the use of T-bills, minimize gold and crypto. So keep that in mind. So I think if you don't own any, I would definitely be buying some in here. Buy some if it goes a little lower. That's the answer right now. I want to see the way it's going. We're kind of consolidating our move right now, up from 1,600 up to 5,000. It's about 4,700 now, so it's consolidating. We want to see if it goes any lower or not. Does that help?
Yes.
But you don't want to put all your portfolio in. If you're worried about, again, there's copper stocks, there's other things out there. There's REITs, Rainier Timber REIT yields 5%. What's one of the biggest landowners in the country. So there's different things out there. Okay, what do we do with the rand? Look, this isn't going well, and we're here where we're here. So a couple things that have been happening right now. The straits are closed. There's a few things getting across. I think they're trying to get the tankers out of there and a lot of the boats out of there so they can be moved elsewhere. And they can go to Angola. They can go to west coast of Africa. They can come to the United States to get oil. Unfortunately, they can't go to the North Sea because they got rid of their oil and gas industry. But a couple things to watch. The foreign minister of Iran went to China here a couple days ago. President Trump is heading, I think, on the 17th to China to meet with President Xi. China is hurting right now. They get a lot of their oil and gas from Iran. One side of them wants to use this to their advantage to stick it to us. The other side, they need the openings. And the other Asian countries like Japan, Taiwan, Philippines, Singapore, the list goes down. Vietnam, they're really hurting for oil, for diesel fuel, for jet fuel, for gasoline right now. So China has the ability to probably influence Iran, saying, "Look, we need your oil. We're going to build you back up." So I think there's a possibility of some type of deal. The question is Iran. When they saw Maduro was taken down, they decided, well, if that's going to happen to us, we're going to automatically disseminate all our decision making to 30 different military and political groups around the country. Each person has his own area. Well, the problem with that is you got 30 people you got to come up with a decision on. In 30, some of those people want to, hey, I think it's time we call it quit. Give them the nuclear material and let's all go on our way. There's other ones that are willing to kind of fight to the death. And I think they're having trouble getting a decision. I think it's important to see what's going to happen when Trump goes to China. I think this will be the key right here. This is doing a lot of damage to the world economy. We're not seeing it here because we got plenty of oil and gas. We got plenty of fertilizer. We got plenty of aluminum. And so this doesn't really bother us. We got huge helium manufacturing. We're like, hey, what's the problem? We're making more money. But the problem is it's doing enormous damage around the world. We mentioned the Asian countries. That the fertilizer, a good chunk, I've seen numbers between 30 and 40% of the fertilizers come out of there. Well, there's a lot of little farmers in Africa and South America and Asia that they don't make much money. The price of their fertilizer went up. The price of their diesel fuel's up, 80, 60, 70, 80%. They can't afford to plant. That's going to be a shortage of food. This is just one thing. I mean, there's good shortages of helium coming up. Helium's used to make AI chips, central processing unit, CPUs as well. It's also used in nuclear, these magnetic resonance imaging machines. It's just there's different types of chemicals, 10% of the aluminum we talked about. So there's real damage being done to the world economy. And it keeps getting bigger and bigger and bigger. And so we need to see, I mean, if this thing gets materially worse, it's hard to see how the rest of the world kind of descends into a big recession, and you don't know who's going to be in trouble. A lot of countries have a lot of debt. The Brits have their 10-year hit 4.7% the other day, and so I mean this has kind of been a big issue overall. But let me see something here. Let me make sure I got that right. So interest rates are going up there, and well, I think that their interest rates are moving quite a bit higher. I think it might be 5.7% there, and so there's a lot of people in trouble out there, and this is going to start affecting the markets and stuff. And so we want to watch that and see where it goes. A lot of companies reported earnings. We had great earnings coming up. But the question is, yeah, hey, we didn't have any problem with the earnings. No, we're not having any problem. Well, that's because you pre-bought everything 6 months into the future. What's going to happen in the next 6 months? And I think no one wants to say, well, look, our earnings are going to be hit in the next 6 months, because everyone's hoping. They keep listening to Donald Trump that the war is going to be ended tomorrow afternoon, for the last month and a half. And so no one really wants to make that commitment. And they're under pressure because, we don't want to hear from all our big companies, yeah, we're really worried, we're firing workers, we're cutting back, we're raising prices. That's a bad look. So I think you want to continue to talk about spreading out that risk. As we talked about, 60%, 40% of the S&P 500 is the Mag 7, Micron, Broadcom, and Advanced Micro Devices. And that doesn't include Intel and all these other, 100 other little, actually medium-sized companies out there that have tech as well. So the S&P probably 50% AI right now. So I think this is what you want to watch. There's other opportunities. If you look at some of the drug or the medical stuff, it just continues to fall. I think that's creating opportunities. There's other things out there. We mentioned that timber REITs very cheap because housing's slow right now. You're buying into actual land holdings that yield 5%. That's not a bad deal. And so you want to keep your bonds short term. Interest rates are rising. The 10-year right now is gone up. It continues to go up. It's kind of come back some, but it, you're still looking at about almost 4.4%. This has been the top of the range. Does it break through that or not? I think possibly later this year, if a few things work out, longer term bonds will be a good opportunity. But for now, you want to have a very flexible portfolio. So, so you want to have it so if AI keeps going up, you make money. But if AI falls apart, it doesn't take your whole portfolio down with it. So I think these are some of the things. Really, the market, the 10-year market starts running into trouble if the 10-year goes above 4.5, but the issue you have to understand is, look, the government's going to try to keep it under 4.5, so it's going to be hard to tell. So those are some things. So look, this week, are we going to get a deal with the Iranians? I think this week is going to be very, very critical. I think we're going to find out whether something's going to get done or not this week, or at least say the next 10 days. If not, it's going to be a real problem. And if Trump can't do something with the Chinese, then it's a real issue, and they're going to have to do something. And I don't see how the United States can go, okay, here's what we'll do. If you just open up the straits, we'll walk away, and you agree not to do nuclear weapons. And yes, you can charge $2 million a tanker. At that point in time, you've ceded control of the Persian Gulf, and basically you've badly lost the war. You've done massive damage to the United States credibility and military might at that juncture. So we're in a tough situation. Let me see here. Mark, tell you what, is Mark, you there? Can we get Mark in real quick?
I'm ready if you are.
Okay, quick, Mark. Just got a few minutes, just a minute or two.
Okay. I have been inundated with texts that are eating about 25% of my storage in the phone. They're talking about Elon Musk. Here, I'll read a little bit to you. Elon Musk's new project isn't about AI. It's about something 27 years in the making, just cleared by the White House. And then Time Magazine calls the $380 billion company the most disruptive in the world, but something big is happening June the 16th. Have you seen or heard of any of this crap?
Yeah, look, I mean, I haven't heard. I mean, Elon Musk, what I think he's going to do if he's smart, he does an AI agent, like a little phone, and everyone has one, and then we don't have to deal with these different all the different stuff on your phone right now, your different apps. Look, I think AI is critically important for nuclear research, for medical research, military, absolutely critical. I'm not sure that everything we're doing is justified in it. And I probably trust Elon more than some of these other people who seem to just be going completely off the deep end. It's a tough thing. I think we have to bear watching, and we're going to find out. And we'll listen to the show. We'll keep you informed on that, Mark.
Okay, thanks.
Okay, thanks. Tell you what, coming up here on the end of the show, a couple things I just want to run by. Remember our motto and philosophy, which is to save aggressively and invest conservatively. That's save aggressively, invest conservatively. That's the key to building up wealth over the long term. In this world today, you want to save a lot of money, and then you want to conservatively invest it, because things are always changing and you want to stay ahead of it, and you don't want some crisis to wreck your retirement. So if you need some help, go to a couple things. Go to our website, maxoutsavings.com. Sign up for the free newsletter. It's completely free. I'm trying to get it written this weekend. We write about all these big issues. If you need help with your retirement, have an old 401k, that's what we do. We manage that at Max Out Savings Advisors. We use Charles Schwab, the custodian of the assets, and then we manage it for you using our value investing approach. You can go to the website, get our phone number or email, just request an appointment, and I'll be happy to sit down with you and show you how we manage money. And take a look at, see how you're set financially for retirement. So if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. And anyway, I hope everyone has a great weekend. Again, what we talked about on the show today, very concentrated market, very frothy market. You don't want to sell everything, but you want to keep your eyes open. You want to continue to reduce risk and not get carried away in this type of environment with all the showmen on CNBC and the other places. Work to protect your wealth. We'll see you next week right here on the Max Out Savings Show.
This has been the Max Out Savings Show with Ted Gioca, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioca on AM 1070. The Answer.
Radical agenda by the far left is destroying the bedrock of this great nation. We must protect conservative ideals with our votes and in our homes. This is the sound of freedom. AM 1070 and FM 1033. The Answer.